it's time now to check in on the Zimbabwean market picture with Sebastian Gumbo. He's a chief dealer at Imara Edwards Securities and joins us on the line this morning. Thanks so much, Sebastian, for joining us. Let's get straight into conversation here. We've seen the markets pulling back on the back of profit taking to a large extent in some of the bigger counters, but perhaps a little bit more of a worrying trend has been the fact that we've had a lot of the trade that we have seen taking place concentrated on 15 of the 68 listed stocks on the overall index. What do you make of that trend right now and the fact that we aren't seeing broad-based activity?
Okay, at the moment it's not surprising that the big companies are the ones that are dominating trade, and that's because those are the ones that are more visible to investors and those are the ones that are making the most money, and I guess have been in the businesses that they do for longer. But it's also encouraging to see that there are some of the smaller names, companies like Tractor Power Holdings and Meikles, which have also witnessed significant amounts of trade, but that's mainly because there have been transactions involving controlling stakes in those companies.
Sebastian, just going into some of the detail, I mean, you highlight that it's the big companies that stand in the spotlight more so, and Econet, one of those companies. We've had that share price rallying 45% year to date, and why this comes as a surprise, because not even the lack of a dividend payout at the end of last year, working to wane on investors' interest.
Yeah, there has been a lot of positive news coming out of Econet. First of all, early in the year, we saw that Econet Global subsidiary, that's Liquid Telecom, acquired Altix's operations in East Africa. That's the infrastructure, the basic infrastructure for their data network. And then further to that, and a bit later in the year, the company announced a proposed share split. So that proposed share split has created the perception of increased pricing points, and it has overcome a psychological barrier with the elevated share price, which was at 600 cents prior to the announcement and will go down to about 60 cents post the 9-for-1 share split. And so because of that, investors have really decided to buy in now, but it's mainly speculative rather than based on fundamentals. The business itself is still the same as it was before.
So with that being the case, Sebastian, would you be a buyer in Econet right now? Because certainly the plans that they've got on the table, in terms of strategy moving forward, seems to be encouraging investors to quite an extent.
Yes, I would, but not for the speculative reason of the share split. If we look at it from a fundamental point of view, the business is still intact. And also looking at relative valuation measures like the PE, which is the forward PE especially, which is at 5.9 times, and taken with the possibility of the dividend being reinstated, and we actually think the company has strong capacity to pay a dividend, I would still be a buyer at these levels. But I guess most of the short-term and speculative gains have already been wiped away.
Sebastian, that on the industrial side of things. Let's shift focus to the mining sector, because we've seen the mining companies on aggregate, 0.6% weaker in light of the trade weighed down by the general need for massive recapitalization. That's been cited as the major reason here. Take us through what's unfolding and your sentiment around the mining space at this stage.
Okay, the mining industry is still very attractive, and this is because there hasn't been that much mining activity over the past 10 years or so, and also there hasn't been that much money invested in that sector. It is touted as one of the growth sectors in the Zimbabwean economy, but obviously development has been progressing at a very slow pace because of policy inconsistencies and just generally that perception of a high level of sovereign risk in the country. But it is an area that we think will come right and will make a lot of sense to be in when it starts moving.
Sebastian, just very quickly, I mean, you highlighted policy inconsistency standing as a deterrent to investing in this space. Of course, one of the short-term risk factors that has been highlighted is the upcoming electoral process. What's a feeling like on the ground right now with regards to what's being anticipated there?
Okay, the general feeling is there is widespread anticipation. I think there's consensus in the investment community that the election needs to be held. It needs to be held as soon as possible just to get it out of the way. I don't think we have not picked up on a general preferred winner of a potential election, but generally the need for a substantive leader is what the investment community is clamoring for at the moment.